Hey everybody, good morning. Welcome to the Ankerstar Wealth Morning Show here 5 minutes before the open of our fourth quarter of this year. We got a lot of stuff we're going to talk about today, kind of wrapping up the quarter, but then again, our official wrap up of the quarter for our investment advisory board presentation will be coming here shortly. You'll get an email on that here soon. As far as our topics today, Mike's going to start us off. He's going to cover what happened in the third quarter, as well as the year, kind of where are we with the markets, and probably a little pontification about maybe the fourth quarter. I won't put words in his mouth there, but then he's going to switch from there to what's going on with the port strike. That's all over the news, so he'll give you information on that. And then lastly, I will close with, we get our building this month. This again is 2 years in the making, if you will, from the time I said I do to the building actually getting the keys later this month. So I'll just give you a little bit of an idea of where it is. I've got to show you it on the map. I'll show you the floor plan and then some of the ideas we have going forward. If you happen to be in the local area, or if you want to fly in to see it, okay. There we go. All right, this financial education presentation, you have to do your own due diligence before acting upon anything you hear in this presentation. The more disclaimer information is available at AnkerstarWealth.com, and the opinions expressed are Mike and mine alone. So, Mike, over to you. Let's wrap up a third quarter.
All right. We got 3 minutes before the fourth quarter officially starts. So anyways, third quarter, what I'm showing on my screen is just the S&P 500 as an overall benchmark to show you 3 months. And if you look, was it straight up? Of course not, but it was definitely up. And there were some dips in there in August and September. One of our forecasts, or we definitely said it's going to be volatile going into the presidential election. It certainly showed that volatility, but volatility is a chance to buy. It's a chance to get things on sale. So we were able to do that in some portfolios, and it goes up. So let me reel it back. So let's look at a year to date. And if you look at the S&P year to date, still you see the choppiness, but obviously up, and it's up 20.81% according to CNBC. So you can see that's if we stopped right now and we're cash for the rest of the year, 20% is a good gain. But that's not what we're doing. Because last year, you could have made that same decision and you would have missed out on the rest of the gains. I'm going to show you the NASDAQ, not quite as pretty. So the 3 months period, if you start way on this left thing on July 1st, you can see that it is up. But from a July 10th high, just down just a little bit, very choppy. Obviously, our portfolios tend to be a little more tech heavy, so this may be more reflective of what you're seeing. But let me back up. Year to date, it's good. The NASDAQ was off to a faster start than the S&P. The NASDAQ's up 21%, so just a little bit more. So where are we going from here? We have presidential elections in, I had to look at my calendar here, like 5 weeks, like 5 weeks from today, I think. So presidential elections, while a month or two ago it seemed a little more certain, now it seems more like 50-50. I certainly expect volatility between now and then, but always realize that the market likes certainty. And while your candidate may not be the one that gets elected, once we have that certainty, we expect the markets will adjust to whoever is president. I say this all the time. Presidents get too much credit and too much blame tied to the business cycle. So when the president comes in, the business cycle's good, they're like, it's me. And then when the business cycle's down, their opponent's like, it's you, it's your fault. They get too much credit and too much blame. So if your candidate does not get elected, there certainly can be repercussions, tax policy, friendliness to Bitcoin, things like that are in play. But overall, this economy continues to go forward. It's good that the Fed is independent of the president and they don't, succumb to their wishes. So anyways, good news for third quarter here. What could cause problems? People going on strike that can mess up the supply line. So I'm not sure, I've lived in Maine. But did I know what the ILA, Union Longshoremen, I had not heard of them. Sorry, guys. Sorry, people. But you know why? because they haven't been on strike since 1977 when I was less than 10 years old. When people go on strike, we hear about them. We hear about the UAW, we hear about the other ones. This is why we haven't heard of these. So they are on strike. Well, how does that impact us? Think of it, and right, it pops up. Dow starts to slip in October.
Yeah, that was on cue, Mike. How does this affect us? Boom.
Yes. How does this affect us? So what causes inflation? Too much money and not enough goods to buy. It says 43 to 49% of all U.S. imports come through the U.S. East Coast and Gulf ports. And this strike goes on for a while. And I'm not sure how long, whether that's a week or a month. But if it goes on for a while, you get the side where there's not enough goods. And I'm going to talk next on what some of those goods might be. But there's less things to buy. Now, for a while with your money, you can go buy this or that. If you can't get bananas because of the strike, you can go buy apples. But then the price of apples starts to go up. So if this goes long term, this is the kind of thing that can cause inflation. If you think of the COVID time when everything shut down and when they reopened it, it took a while for the supply lines to be reestablished. And that's a lot of what caused the inflation, because things didn't come over to be purchased. This is the same kind of thing. Now, I'm not saying this union's wrong for what they're negotiating. I mean, I do not know what their benefits are and where they've been paid in the past. I don't think, let me see. I will tell you, they just rejected an offer that gave them a wage hike over 6 years of 50%. And initially the offer was 40% over 6 years. And they're asking somewhere in one of these articles, I'm going to show you, they're asking 77%. Now, the good news is when you start to get numbers and you know what people actually want, the negotiation can start working towards the middle. So that's where that stands. And while 50% over 6 years, they may say like, wow, that's a lot of money. That's a great pay raise. You don't know what they're being paid now. So I really don't know. So that may be fair. That may not be fair. 77% may be appropriate. I don't know. And I'm not going to weigh in on that. But I'll just say that one difference between this kind of union and say the UAW, this union strikes all up and down the coast. One group of people can't shut down everything. That's what happens in the automotive world. If one union goes on strike at a brake plant and no brakes are supplied to assembly plants, one striking plant can shut everything down. Therefore, union funds are able to pay them to go on strike, and everyone else gets unemployment. It doesn't work with this. At least I don't think this one works the same way. You have 50,000 people on strike and they all got to stay on strike, which means they're not getting paid or they're getting paid out of a union fund. So all I can say is I hope it gets resolved quickly and doesn't disrupt inflation, which would disrupt the Fed discount rate, things like that. Well, how does this affect you other than your money? What might you not be able to get? So I pulled this up, fresh fruits and vegetables. I mean, I guess people still eat those. No, I mean, I thought we all ate processed food and unhealthy meat. But anyways, bananas, mangoes, I got to run out and get, stock up. But here's the thing, those things don't stay good for a long time. Therefore, the strike impacts you. But look at this, Steve. Oh, my goodness. Other food and beverages, including beer, wine, and spirits. Wow. People we might have a presidential mandate to end this strike. And then you get your, toy makers from Asia. And I always think of the old McDonald's little toys and Happy Meals, and people in China are like, and why are we making like 10 million of these little toys? But whatever. Maybe the kids won't want to go to McDonald's anymore. So anyways, that's just kind of enough to cover there. I'm trying to see, there was one other piece I wanted. Oh, here's where it says they're looking for a 77% wage increase. So, and then I did like this map. That's what I wanted to show on this article, is like where these volume of containers. And if you think of those big shipping containers, this is what's on strike all up and down these coasts. Throw in that there was a hurricane last week, and I imagine things are starting to build up pretty quick. So that's the bad news, but obviously we'll be monitoring it as this goes forward. I'll turn it back over to you.
Yeah, and it really is that big of a deal. That's why we chose to put it on the morning show this morning. Is there's the impact here in the U.S. You can go ahead and bring that down, Mike. But there's also the global impact of whenever you run into supply chain issues, right? If you can't receive it here, it's getting backed up somewhere else. So just remember all the ports that elsewhere that are being affected who are not on strike. They have issues too, especially with this stuff. And if it's perishable, then that's their problem now, right? Too. So a lot of kind of hope for a quick resolution. A lot of times strikes can seem like, it's BS and they should stop striking, but, they have, obviously a point to make too. That's why that's why they're striking. So, until, won't pass judgment until you kind of understand what the underlying issues are in there. But one thing I want to transition to is what's going on. I hope Ankerstar Wealth workers never go on strike. Hope I never give them a reason to go on strike. But here is the screen I'm sharing out with you. Mike, do you see
Yes.
the couple of okay? So yeah, this is from our investor slide deck, which again is, remember, there's folks that have shares of Ankerstar Wealth, because I wanted to share equity out as we grew the business. So kind of, everybody's a partner, if you will. From the employees as well as certain shareholders that chose to be a part of it. But you can see in the lower left is the floor plan of the building. We're going to have, there's the entry and exit. We'll have a reception area back. The war room's kind of the classroom. The back wall being an infinity wall. I'm pretty excited about that. And then we have the executive lounge. If you've heard me talk about, the executive lounge, kind of a speakeasy motif, if you will, but a luxury area for folks to come in, and we can either talk to clients in there, or people can rent it out. More on that in a second. And then we have our command center off to the left, where a couple of us will be located full-time when we're not client facing, right? We'll be off in offices and meet with you one-on-one in offices when you come in. But when we're all kind of together, we'll be over in the command center. You look upper left, you have that's where we're targeting is the North Austin Quad City area, which I've coined that phrase. So far, I've got one person saying it, which is me. But targeting the Round Rock, Leander, Cedar Park, and Georgetown area, everybody's within 20 miles and a 30-minute drive of the actual office there. So that's where our digital marketing campaign is based on, focusing mostly on the mass affluent and the high net wealth at the early stages, anywhere from 500K to 2 million is kind of your mass affluent, and then the 2 to 5 million is your entry level into high net worth. Off to the right, you can kind of see in the upper right, that actually is what the building looks like now. All these buildings are built in here. If you think locally, this is just north of New Hope Road. It's now 4 lanes all the way through to our office, so I like that part. As far as how we're going to monetize this, and grow as a firm, and what events you can expect if you're listening in. If you're a current client, again, happy hours, appreciation events. We'll have folks out to the building. We can have up to 65. What's nice about these is the folks we bring in, our sponsors actually pay for the food and drink involved in the situation. So you see some listed there that we already have partnerships with, Texas Capital, Bitwise, Moonshots, Capital, commercial real estate folks. They have long titles, so I just kind of abbreviate it there. Opportunity zones and tax and legal experts. So, what we've done in the past is explain, these folks meet with us, they take us to lunch, they give us these, beautiful handouts and things. And then we try to explain that to you. Well, I have my one handout and I'm explaining it to 5 clients, right? So it's like, I can't give you the handout because I need it to explain to somebody else. So this kind of short circuits that and allows the expert to where, if you're interested in how can I minimize my taxes? Well, we've got the major avenues for doing so. We're bringing them in-house temporarily, right? And, to come in and talk to you about those things. So each of these is going to be about a 15-minute kind of presentation on their subject matter, happy hour style. So we're just going to be standing around. It's going to be informal, but presentation of sorts, and then either one person or the team that they bring out are available to answer questions. From there, you're going to see winter educational series. Again, this is for clients as well as potential new clients. Can only have 40 people out at a time for these because we are in the classroom now portion. Relevant investing topics. You can kind of see down to the bottom right. If I can get everything up to speed by November 14th, it'll be right after the election. So we'll have, election in your portfolio seminar, and then tax loss harvesting and into your tax strategies. You can read through those at the bottom right. But that's really what we're trying to offer with the building, is now bring a full service wealth management to you, to where if we can short circuit, i.e. bringing in experts or having me stand up or any other advisor stand up and talk to 40 people at a time. That is very beneficial for us being more efficient and gives us more capacity to, again, grow our business. Because right now there's the one-on-one's important. That's not going away. But if I'm going to say the same thing 25 times, it would be helpful if I could just bring everybody in, say it once, and then ask your specific questions. There's some monetization stuff at the bottom. If you are a current client and you want to rent out a portion of the building, again, I've got a couple offices for rent. One of them's already taken. We got a conference room if you have needs for a conference room, and then the executive lounge and classrooms also available. Reach out to somebody on the team if you're interested in that sort of stuff. All right, so that's what I have for the building. Mike, any thoughts on any of that? Are you going to come out and see the building?
Absolutely, I can't wait. I mean, is there like a little bedroom in there for the CIO to work 24/7?
We do not encourage anyone to permanently inhabit the building. We would like to draw a line there, but they do have hotels nearby. So yeah, but I do intend to have. This is a very expensive time right now for the company, so we're spending a lot of money to get the building right. Once we're in the building and we grow the assets under management, then we'll have a little more revenue. But I do, at least in early 2025, want to have a team meeting where we fly everybody out, and so we can have all of us under one roof at one time for really the first time ever. I don't think we've ever actually had that now that we have 8 of us. So, all right. Thanks for listening, everybody, today. Again, welcome to the fourth quarter. And I would say, Mike did a great job of saying we've had a great year so far. Hey, just temper the expectations going into the election. We're not saying the market's going down, but we'll say it probably needs to stay strapped in because it's going to be a ride, is our anticipation. With that, we'll talk to you guys tomorrow. Have a good one. Bye.